Idaho Technology Council presents Innovation Matters, a look at innovators, rule breakers, and thought leaders from across Idaho. From our studios in beautiful downtown Boise, here is your host, the CEO and founder of the Idaho Technology Council, Jay Larson.
Welcome to Innovation Matters. This is Jay Larson with the Idaho Technology Council, and today, which is the 19th of April, 2022, we have Andy Scoggin to come speak with us. Andy is one of the partners over at Stage.O, as well as Scoggin Capital.
On capital investment.
And
investment's a verb.
It's a verb. We got to make sure
not
we get that right.
investment. It's investment.
Yeah.
It's a verb. That's
and
what we do.
We have Andy. Welcome, Andy.
Thank you. Thanks, Jay. And thanks to everybody, or welcome and hello to everybody out in ITC land. It's a pleasure to sit down with you, Jay. And I've told you this more than once, and I mean it sincerely. I think you're one of the best interviewers in the business. You just do a great job for the ones that you do. I'm hoping that I can contribute a little bit now to one of your interviews.
Well, this is awesome because we've been talking about, as we've been planning, we said we got to get Andy Scoggin on this because next week we've got two capital events, really, that are big ones coming up. The Idaho Technology Council's Capital Connect conference is on the 26th, and then the next couple of days thereafter is going to be Stage.O. So next week's going to be a big capital week for the people in Boise, right?
Absolutely. And then we've got We Rock, which is
Right.
women's entrepreneurial organization as well during that week. And yeah, there's a lot of exciting stuff going on.
Yeah, with We Rock too. That's another one. That's great. So,
Yeah.
But Andy, I just think we get into this because there's not very many people that have as good an understanding of the capital markets in Idaho as what you do. If you think about all the time from you came to the Boise Valley because of Albertson's company, right?
Correct. Yep. 30 years ago.
30 years ago. So you've got this 30-year runway of being able to see some amazing things that are taking place. So maybe we can talk really quickly. The 90s was a really hot time for Boise and Idaho with Micron Technologies and Micron Electronics and HP doing really, really well. Obviously, Albertsons during that time frame was doing really well as well.
It did well until the end of that decade, yeah. And it was coming off some hot decades in the 60s, 70s, and 80s.
So talk a little bit about that time frame and where we are today in 2022.
Yeah. These are all going to be broad strokes, and obviously there's a tremendous amount of detail that we can't get into in these. But in broad strokes, I feel like the 90s represented kind of a big companies dominated economy, and then very small service type providers, but not a lot in between. And what I see today, and those are great companies, and those companies created lots of jobs and brought people here, and built legacies, and they were tremendous. And then today we are just far more diversified. So we don't have the 4 to 5 to 6 dominant companies that really dominated the economy. Plus, of course, agriculture,
right,
which is the mainstay today and has been throughout the entire history of the state of Idaho, which we can't ignore. But thinking more of kind of the downtown stuff, well, Simplot, there's a tremendous agricultural company that's brought a lot of tech to that as well. But you look at where we were then with a smaller base, and today where we've got just a lot more diversity across the economic platform here. And I think, of course, the Treasure Valley, where most of my time has been, but I also have good friends and some insights into the north, the east, and other parts of this state, and similar moves have been going. Where you're seeing more of the rise of that mid-sized company with tremendous potential to really continue to grow, versus a local business, a local restaurant, a local shop, etc. They're going to be constrained in their growth, but the kind of businesses we're seeing now that are adding into that local restaurant shop, great base of the economy, and then the huge, multinationals and national companies is this, emerging group of businesses that are creating more opportunities for people to move around. And this is not just the last year or the last 3 years. This is the last 10 years where we've seen this rise. I've seen this rise at least come along. And, I think we can dig into some data on it. We're now seeing stuff like the deal flow report and stuff that Blake Hansen and that group and others working on those programs are starting to. You can track that. You can see a lot of that change coming where the flows are going into more diversified and differentiated companies that are staying here, making their homes here, and or bringing a division or a portion of their company here.
And the beautiful thing that you're talking about, I mean, which we can talk more about that, but this whole idea of measurement and the rise of innovation and technology, because back in the 90s, you could probably you could say that Idaho's a very innovative state. But what I think is going on is the deal flow report that you referenced that Blake puts out, that we put out through the Idaho Technology, through the Idaho Technology Council. One of the things that was really great about that is that we're basically last year had $3.5 billion invested in M&A, private placement, IPO type work that was done in Idaho. But what's really cool about this is that there were 155 deals that we tracked. Out of the 155 deals, 55% of those came up and had the growth represented technology or software companies.
Mm-hmm.
So now you've got about 60 companies that are out there this last year that really got some pretty significant capital in that. So is that kind of plays into that diversity idea that you were talking about? I mean, because I don't think we didn't have that type of fervor back in the 90s, right?
That's right. We had obviously some harbingers, some green shoots that were coming up. You look at a Bob Locken and ProClarity. You look at some of those companies that were starting to show up in the 90s, right. and they were proving, I think, a thesis that Idaho was starting to become a place where we were going to be able to attract the kind of intellectual capital that was going to then bring monetary capital, and was also going to bring customers and other elements that are necessary to really grow that ecosystem here. And so I do think that the 90s started to spring forward a little bit of, can technology make it here? I remember when a friend of mine who was in the Bay Area and was a fairly senior person with Oracle gave a call and said, hey, moving my family to Boise, Idaho. This is in the 90s. And he said, Oracle thinks we ought to, put an outpost out here. So you're seeing things like that happen, but they were tentative steps. They rented a small executive office. They didn't, purchase their own space, or et cetera. It was, can this happen? Then the next 25 years started to prove out that those people who took the risk and had the foresight were right.
And I think that's so. If we take a look right now, in the last couple of years, you've had Stage.O, which you're a big part of, and Mike Self, and if you
Mike Self and Matt Pupolo.
Yeah, Matt Pupolo.
Yeah, our general partners, and I'm an operating partner as well as Dave Self, the operating partner.
Okay. Yeah. So you have,
and we're going to talk about that in a lot more detail at Capital Connect. So be sure you come, everybody.
Yeah, that's on the 26th over Boise State.
Yeah.
In the Simplot Ballroom. So, as broad strokes on this one, what when Mike Self, when you first started looking at Stage.O, what caused you to want to invest and put money into Stage.O?
Yeah, great question, and you are right that I actually invested and came in as a limited partner before I made the decision to also join them as a partner. Actually came on initially as a general partner, but then Scoggin Capital Investment took off much faster than any of us thought. And so then kind of balancing the two, because I want to stay very involved with them. My partners were fortunate enough to kind of create that situation that works great at Stage.O and run our other investment portfolio. And what I'll answer the question pretty in a one-word sentence, Idaho. So I wasn't looking, for yet another thing. We just IPO'd Albertsons, had a great result with that for me and my partners there, and we'd all kind of over that year in between or before through to the IPO, most of us who had founded that Albertsons LLC group had started to move on to see where, either from full retirement to see where we're going to go. And I wasn't ready for any kind of full retirement, but I also didn't necessarily want to tag myself into something else. And so I started, or I got a call from Mike and Matt, and they said, "Hey, would you come and chat with us?" And a couple other folks whose names we I'm going to talk about them, but great, really trusted people in town. We were all meeting with Stage It Out, kind of giving insights to them, because this was a institutional capital player coming to Boise, Idaho. It doesn't exist, and we need to talk about that in a second. So, I said, part about investing is I want to invest in entities that want to invest in Idaho. And this was the second fund for Stage It Out. They actually had a first fund when they were headquartered in Seattle, and they had, I think it's 8 or so, and maybe 9 companies in their portfolio, but they were spread out around the country and really around the world. They said, Mike and Matt and their original partner, Devin, as well, who has now gone on to CEO of one of our portfolio companies. They said, looking around the country and really around the West, where is the next, maybe not the next Silicon Valley, where's the next Boulder, where's the next Austin, where's the next, Utah Valley, where's the next, those kind of fields where can you get in before everybody's there and take advantage of kind of first mover status. And looking around the country and having been exposed to this area a few times, coming out and done some presentations, etc., Mike and his crew said, we're going to make a big bet on Idaho. We want to build a $50 million fund here in Idaho. Well, that may not be big money in New York or San Francisco, but $50 million in Boise, Idaho is a serious stake in the ground.
It is, and having his brother, Dave here, probably helped him understand a lot more about the market.
He was a well-respected executive for years in the city. So I, tussled and wrestled for a long time about, do I do something like that? And the concept, the thesis, the goal of being very closely tied into really the first, or one of the first, but certainly kind of critical institutional capital player here in the Treasure Valley and throughout the state, saying we're going to bring money in. This $50 million can only be invested in portfolio companies that are headquartered in Idaho or have a substantial and serious portion of their business based here long term. Well, that's making a bet on Idaho and finishing out my career, 30 years, with rebuilding a retailer that is a substantial piece of Idaho's history, business-wise and economy. Where I saw the next chapter is, how do I give back to Idaho what they gave to me and my family over the last 30 years, and build a place that my grandkids are going to have opportunities to live through. And this felt really good, especially with people who'd already developed a method and an approach to investing. And by the way, you've all probably seen some news on Plextrack, first portfolio company in the company before I even came in Stage It Out's portfolio, but worked closely with Dan and his team on a number of
$70 million
pieces of it.
Last deal,
$300 million valuation. Even more importantly, from when we invested, in single digits.
That's amazing. A great company, right?
Great company, but it shows that thesis that there, and Dan DeCloss, the CEO, came to Idaho, and moved around within the ecosystem, developing his skills, and there's enough demand for people like him that then he's able to launch that into a company that he believes there's going to be demand for, and that can go worldwide from Boise, Idaho.
Your point of this is so well taken. You said one word, Idaho, because you wanted to build Idaho, and that's what this is all doing. Staged Idaho.
Correct.
What's interesting is that I've heard these things from you just over this last little bit, Andy, about testing hypothesis. You have a very keen mind on business, which has been awesome because what you were able to help Bob Miller and your team do with the Albertsons companies was unprecedented. I mean, we basically lost Albertsons.
Yes,
company.
Well, we weren't going to let it happen, but we were wondering because yes, the bulk of that company went to Minnesota.
Yeah, to Minnesota.
And we took
Super
the dregs and tried to turn them into something.
Yeah, and I think I heard something like we sold the Albertsons company stores to Super Value for like about $12 billion.
You are correct.
And then when you guys the hypothesis of bringing this back in.
This is 7 years later after we bought the third of the company that nobody wanted, and they bought the 2/3 that really everybody wanted.
And then you
for
bought
$12 billion. We bought ours for $300 million, and then we bought back the 2/3 that Super Value bought in 2013. So they bought them in 2006, and then in 2013 we bought those for $3.3 billion. So yeah,
so
almost a $9 billion reduction in value over that time. Great people at Super Value. Strategy did not work, and they were headed towards bankruptcy. I mean, they were headed towards a really difficult road, and they needed somebody to come in and take a piece of
right.
what they were dealing off. And the timing was great for us because we, on the other hand, they'd had 28 consecutive quarters, 7 years of negative sales. We'd had 28 consecutive quarters of positive sales.
Yeah.
And I'd say that I think we may have had 2 during the 2008 recession that were flat to slightly negative. But, we did our $300 million acquisition of ours, and over 7 years, returned $2 billion to our investors. So we knew that there was, as you said, a thesis there for how you can, run a company.
Yeah.
In our case, this retail company that had deep historic roots in Idaho had tremendous amount of pride and talent still spread across the country, but had to tap into it and give it the leash and say, "Run now, go, and we're going to be behind you, but you guys are going to and gals are going to deliver on this."
Andy, this is going to be and I don't want you to feel like I'm asking. I really want you to really get to the heart of this. Why was, because this whole thing that you tested, this hypothesis that Bob Miller and the rest of your team that you brought in, why were you guys so successful? I mean, that was amazingly successful, what you were able to do. And why were you so good?
Yeah. So we need another podcast because.
So we'll put one up. Pause on this one.
Do it because I've got I think it's 13, maybe 17. It's been a few years since I've pulled it up, but a list of the principles that we used, and we were absolutely laser focused on them. And they were different than the other players in the retail business, including Super Value, including Safeway, including others, who were full of really great people. But at that moment in time, the old stuff wasn't working, or maybe the new stuff wasn't. I don't know how you say it, but what we did as a team, and it obviously clearly wasn't just me, or clearly wasn't just one or two of others. And Bob will tell you it wasn't just him, Bob Miller, who was the CEO for us. It was how we gelled this group together, and then were so incredibly aligned on these principles. And every time we did an acquisition, principles rolled in, and over again, we stayed very, very true to them and didn't let them fall off. And that's hard to do as you go from a 200 store company to a 2,000 store company over.
To keep that culture, right? To keep the culture.
To go from a $4 billion of sales to $50 billion of sales in 3 years. To go from 20,000 employees to 210,000 employees in 3 years. That was
stress and strain on a company.
But we built that foundation for 7 years, which allowed us in 3 years to go from 7 years of just basically turning around, strengthening that company, and then applying those principles in 3 years to go where we went. But we want to go back to Capital in Boise, don't we?
We do. And what I'm going to do right now is I'm going to ask our producer, Moshe Herman, to make sure that he gets this back on, so we get to talk about those 12 to 13 points. All right. So we'll put it. We'll put that.
When Moshe calls, you can't say
you
no.
can't say no. Moshe is he is a force.
Yeah.
Okay. So
this is what I wanted to say to you is that you're starting off with what do we do in Idaho now to take us to the next level. And I think that's where
it is.
And maybe we talked about that before we jumped on. I can't remember or we have, but that thought I want to nail into, drive into, because where we've been for the last 15 or 20 years, where we're seeing this diversification, much of it is just being done by private investment
Mm-hmm.
and private investors, which are awesome because they're necessary and critical, but they're not institutional, so they're not raising funds and then going out and investing in Idaho. So that's the next evolution, is to strengthen and support those private investors and private groups. Look at, but I'm not going to name them, but they're great companies that are here that are basically funded through their owners. And then there's also some angel kind of stuff that goes on and has gone on here and has given us the chance to be where we are. But the next step is to add to that this institutional fund type capital that has, one goal, one purpose, and it grows these companies. And Stage Shadow is an example of that. But there are some, it'd be great to have a $1 billion.
Yeah, and Andy, a lot of those companies that start going into markets
Yep.
as they develop, like you were referencing, that Boise is kind of identified as the next big market. Because if you think of the Western United States, Boise is one of the top places that are starting to develop.
Right.
Right. So isn't it generally where you have people have had really good exits that kind of help build some of that ecosystem along the way?
Without question, there is a long history of that in strong markets, but you can't rely on those people alone to do it. And I think sometimes there's an undue pressure placed on a founder or early group to say, okay, now your job is to go out and start a fund and build the next company. Some people have that passion. Some people just want to turn around and run another company.
Right.
Some people want to go play with their grandkids. So you've got to have that passion and that desire and that intense curiosity and interest in that piece of the puzzle. If I'm a born entrepreneur, I want to be running my own company. If I'm somebody who loves to have this every day is a different adventure, you're more likely to be in the capital side of things, because you get to work with 10 entrepreneurs in a week instead of one. And yet if you don't like to have your attention just spread across everything, you're going to be much happier focusing on building your next big company. We need both.
Right. And you also have that some diversification in this part, right? Because luckily we have you that has all those criteria where you want to continue to give back to the community. You want to play with your grandkids. You want to make the world a better place. I mean, you have all of these things and a lot of gas left in the tank to be able to do a lot of wonderful things. But that's the beautiful thing, is that we actually have a lot of founders. And, like you're saying, you don't want to put undue pressure on that, because a founder could want to go do a lot of different things. Yeah. But we need to have an ecosystem, the ecosystem of how we continue to grow what's been taking place over the last 15 years has a great foundation for what we can do for the next 15, right?
Right. Well, that's exactly right. And so founders can do a lot of different things when they have a great exit. One of them is to kind of jump into this capital side. But another one is to just be an LP. And we have attracted, several $1 million, well, more than that. I don't know what several means, but, tens, from people who had successful exits. And rather than, they don't want to necessarily do that, they've come into Stage Shadow.
Talk about what an LP is.
Limited partner. So the general partner, they have the responsibility basically to run in the world of venture capital fund. And the general partnership really is these general partners, in our case, general partners plus operating partners. We run the day-to-day operations, whereas a limited partner is an investor. And so they have limited liability, and they're not expected to show up every day and be working with these portfolio companies. And then we have a sort of a middle step, which is called a venture partner, and they are more of a they generally will invest as a limited partner, and then they'll be involved with our companies in some way, but it's very flexible for them. It's not a paying gig. It's more like I love being with entrepreneurial companies. Yeah, come be with our portfolio companies. You're invested with us. Come mentor them on a once a quarter basis. Come hang out with them, whatever you want to do. So we've got kind of that graduated series of ways to be involved, from a pure limited partner that just wants to put the money in and bet on Idaho, to somebody who's involved every day, like a Mike or a Matt.
Yeah, which is a good point. So last part of our conversation, we haven't really explored a lot more of the other side of Andy Scoggin's investment world. I know that you've actually done some really fun stuff. Brundage Mountain,
right?
The ski resort is something that you've invested in with
small group.
Small group.
That's been a phenomenal experience. I didn't learn to ski till I'm adult, and then I fell in love with it because it's a great family event or sport or outdoor activity. And so, our kids grew up with us, learn how to ski and doing that together. And then we, saw this family-owned resort that has so much of Idaho in it. And, there were big national players, regional players that were more than willing and interested. But that family, was quite the family that had owned it for many years, and they've been partners. A great history. Somebody should go look up. Simplots were involved at some point.
The Browns,
and then the Boers were involved with it at some point. Anyway, they really, their vision was to keep this an Idaho-based place where families can come. We're less than half the price of what you pay in a Utah ski resort still, and we're working hard to keep that kind of opportunity. A lot of student, pricing, family events that we have, fun things that are happening, and the family sort of bet on us as a small group of all of us based right here in Idaho as the new ownership group that we've done. So yes, that's a Scoggin Capital investment right now.
And anything else that you like on the Scoggin Capital investment, because that's taken off even more. Anything else you want to tell us about?
Well, the interesting thing is that the pandemic, which should have been a very difficult time, and was for many people, many businesses, absolutely. There's some great survivor stories. You look in the travel industry, and some of those industries that were tremendously difficult. But by accident, I was part of the founding group of an actual foods company. We have headquarters in Linden, Utah, but we're also down in Texas. We're in Dominican Republic, around the country, around the world, really. And we were growing at a pretty good rate for about the last 10 or 11 years. And this was separate from my Albertsons business, but it was an investment in Scoggin Capital. And we were sitting about $65 million in annual sales coming into the pandemic. We broke $100 million quite nicely last year, because people started buying food in the store and online rather than just going to restaurants. We know that. So that turned out really well. And now we've had, tremendous growth, a very profitable business. And we've been, approached a number of times about acquisitions. We're on the lookout for some acquisitions, but we've had great growth and experience on that one. I sit on the board there, lead that board. So that's a very active investment for us. Invested early in Idaho First Bank, great local Idaho community bank. And I went on to 2 branches when I came on. We're at 7 branches now. Went from a little over 100 million to almost $500 million. And in the pandemic, again, had PPP loans. Who knew? That we had a phenomenal management team that were working in shifts. At one point, 20 hours a day to be able to work through the PPP loan demands. But it paid off really well in growing that business. And that's one where we've just been acquired, and we were very careful to be acquired by someone who will leave Idaho First as an Idaho community bank, focused on Idaho. And there's others. There's a lot of portfolio. There's a real estate portfolio. There's other stuff that we're dealing with. So we're having, very involved in that. But also, probably the highlight of my month is going to my ITC meetings.
Oh. Well, if that's the case, then we have to make sure we shout that out to the world at this point. Hey, Andy, this has been great. I think that what I've learned is that I always like, the hypothesis. You're really a person who likes to test things. You know what you like, and you really are bullish on Idaho. So thank you for all that you've done for Idaho in multiple areas in your private life and all the things that you do create a better Idaho. So thank you so much.
Well, thanks to Idaho Technology Council and the vision and the execution.
Well, and we will make sure we get you back on to talk about what we might call the Albertsons Company's way.
There we go.
Like that. And thank you. And come next week, the 26th, to the Capital Connect Conference from 9 a.m. to 1 p.m. to be able to listen to more about what's going on with Andy and Stage.o and myself and many other companies that are going to be presenting.
I'm looking forward to hearing the many other companies.
It is. It's going to be totally awesome. And then we also want to make sure we publish the next Innovation Matters. We're going to have Jeet Kumar, the CEO of In Time Tech, and also currently the chair of the Idaho Technology Council, will be on the 6th of May. And on the 17th of May, we're going to have Reed Steffen, who is the Chief Information Officer for the St. Luke's system. He'll be coming and talking about all the changes, all the things that have taken place there. So a lot of fun stuff. So thanks again, Andy, and thanks for joining us, because in Idaho, innovation matters. Thanks, and have a great day.
Innovation Matters is the production of the Idaho Technology Council. For membership information and to get involved, visit our website at idahotechcouncil.org. Thanks for listening and helping us transform Idaho's future together.